A batch of macroeconomic data released at the end of the summer sheds light on the current economic conditions in the United States. A series of data published yesterday supported risky assets. Today, the statistics did not come as a bombshell. Trading volume on Wall Street remains low as investors are looking forward to the government data on the labor market, which is due on a Friday. The benchmark stock indexes closed higher on a Wednesday, and the Nasdaq and the S&P500 surpassed the highest levels of August. The Dow Jones grew by 0.11% yesterday. The Nasdaq added 0.54%, and the S&P500 was the best gainer as it climbed by 0.38% to close at 4,514 points. The stock indexes traded mainly in the green in the New York pre-market, but went down before the opening bell. Futures on Wall Street indexes hovered between dips and gains in the early session. The S&P 500 is expected to trade in the intraday corridor between 4,490 and 4,550 points. The S&P and the Nasdaq closed with gains yesterday because fresh economic data signaled cooling down economic growth. This cemented expectations for a pause in the Fed cycle of rate hikes at least in September and perhaps in November. The S&P 500 reached the highest mark in almost 3 weeks. The Nasdaq closed at the highest level since August 1. Investors welcomed the ADP employment report. It showed that the U.S. private sector created 177,000 jobs in July, much weaker than the expected increase of 195,000. It indicates signs of softness. Besides, in the second estimate, the U.S. GDP expanded by 2.1% in the second quarter, slower than the 2.4% growth in the first estimate. The likelihood of a soft landing supported stocks and other risky assets. Nvidia shares rose by 1% to close at the highest level ever. It was the most traded company on Wall Street. During the session, the company sold shares worth $35.5 billion. Shares of MasterCard and Visa added about 0.5% each after it became known that the companies are preparing to raise fees on credit cards. HP shares tumbled by 6.6% after the personal computer maker cut its full-year guidance due to slowing demand. Traders bet that the Fed will leave interest rates unchanged in September, were nearly 89% from 86% the day before, while bets on the November pause rose to 54% from about 52%. U.S. Treasury yields fell to nearly a 3-week low, with the 10-year yields last at 4.12%. This also supported the stock market. On Thursday, futures for the U.S. stock indexes went up, though at a slow pace. And today's data did not surprise the market and kept hopes for a pause in interest rate hikes by the Federal Reserve. The U.S. Commerce Department reported that the PCE price index grew by 3.3% in July on a year in line with the expectations. This indicator is believed to the Fed's preferable inflation barometer. The core PCE also matched the consensus and rose by 0.2%. Excluding volatile food and energy prices, the index climbed by 4.2% in July in annual terms, the same figure as estimated. In a separate report, personal spending in the United States increased in July faster than expected. Consumer spending, which accounts for more than 2/3 of the U.S. national economic output, increased by 0.8% last month. an uptick higher than the expected reading. The data for June was upgraded to 0.6% instead of a 0.5% in the previous report. The labor market, in turn, continues to keep investors in a suspense. Initial jobless claims fell by 4,000 to a seasonally adjusted 228,000 last week. Economists had forecast 235,000 claims in the last week. In addition, economic woes and market struggles in China affected market sentiment on Thursday. China's stocks declined again because manufacturing activity contracted for the fifth month in a row in August. U.S. Treasury yields remained at a weekly low, falling due to the weaker employment data ahead of Friday's non-farm payrolls. Fed policymakers such as Boston Fed President Susan Collins and Atlanta Fed President Raphael Bostic are investors' radars today. The US dollar managed to recoup some of its losses. Its index benefited from a considerable fall in the euro and the pound sterling. And the US dollar index was trading at 103.60 at the time of recording this video, 0.5% up. The intraday CAD is seen between 103.10 and 103.90. Inflation in the Eurozone remained flat at 5.3% in August, however the core CPI slipped by 6.2%, so the market downgraded the expectations of another rate hike by the European Central Bank in September. The market is now pricing in a 30% chance of a 25 basis point rate hike in September, compared to a 60% chance a day earlier. Meanwhile, Bank of England chief economist Hugh Peel said today that the central bank will get the job done to bring high inflation down to 2%, even if high interest rates hurt the British economy. Following the news on Thursday, the euro fell by 0.7% against the dollar, while the sterling lost 0.35%. Data from Europe supported the US dollar, contrary to the domestic data, which did not come as a surprise and reinforced the relief in the Fed's pause. As for the Canadian dollar, growing oil prices mitigated the negative impact from a rapid recovery of the US dollar. The USD CAD pair traded at 1.3520 before the opening bell and 0.07% down. The instrument is likely to trade in the intraday CAD between 1.3480 and 1.3590. The loonie cheered another rally in the oil market. Brent crude grew by 0.9% in the early American session to trade at $86.02 a barrel. WTI futures added the same to trade at 82.23. Importantly, the market today expects another OPEC decision on a production cuts, which will potentially help limit supply, offsetting risks to demand due to economic troubles in China. Besides, some analysts predicted a significant supply shortage for the third and fourth quarters in 2023. The crypto market is clinging to its gains, driven by Grayscale's victory. Bitcoin settled above 27,000, and today the token is trading at $27,111, having dipped by 0.5%. Popular altcoins are trading mainly in the red today. Ethereum, Solana, Ripple and Cardano lost from a 0.05% to 1.4%. Binance and Litecoin gained nearly 0.4%. The latest news on the crypto industry encourages a recovery in crypto assets. Still, traders prefer to act cautiously. Investors are monitoring the trial of a Uniswap. In a class action lawsuit filed by customers, the court sided with the exchange, but on a positive note. The court also called Ethereum and Bitcoin commodities, not securities, as the US Securities and Exchange Commission does. By the way, today Financial Times defined Gary Gensler the most repressive leader of the Commission. As for Bitcoin's intraday outlook, the token is still trading above 27,000. If the price recovers to 27,300, the door will be open to $27,900. Alternatively, the price could decline to 26,800. InstaForex team is inspired by your feedback and success. Welcome to leave your comments and ask any questions. See you online tomorrow.